Hey, good morning, all. Just want to do a really quick video on just accounting, finance, and like the business world, I guess. So you'll see a lot of stuff. Again, I follow the mainstream financial channels pretty closely, and you know understand a little bit, maybe more than the average person, because I work in accounting and I'm a CPA and just have an interest in investing in financial markets and stuff. Very complicated field to understand, just because the decision making is done largely by high frequency trading, sort of supercomputers and stuff like that. And it's the world now is very interconnected financially, so it's complicated to try and get a sense of what's going to happen next. And so, but I do want to talk about two terms that are thrown around in the last few months. Is tax cuts. Corporate tax cuts was something that Trump introduced as a way to quote unquote stimulate growth. But that's that is sort of one way to stimulate growth. I'm not saying it would be totally useless, because that would basically increase what's known as the free cash flow for a company. And I think most corporations have to pay tax installments on a quarterly basis. Like they don't do it like yearly, like we do. So they have to spend some money, throughout the year, to pay their best estimate of what their tax burden will be for the whole year. And so, cutting taxes will increase cash, availability, and then presumably more cash, free, which is what is meant by free cash flow. It's money that is available to be spent or invested. They could expand, and all that kind of stuff. But really, what we see with corporate with share buybacks, corporations are basically using loans or their own free cash flow to buy back their own stock and prop up the stock market. So it's not being invested in capex, capital expenditures, new buildings, expansions, bonuses, higher pay for their employees, etc. So that is very mainstream. So I guess technically three main topics. So corporate share buybacks is tossed around, and that is, to me, basically insider trading, because corporations are allowed to buy their own stock on the free market at their own discretion, and or sell at their own discretion. And so, that's obviously they're the ones who have inside knowledge into how the company's doing. So that by definition is insider trading, and you will never hear that on mainstream news. It's completely illegal. It's unfair, because how can we compete when we're buying and selling with companies who have the information with how they're doing, and are buying and selling freely on the stock market. So the free cash flow is basically being used for that. And so if the tax cut were real and it did increase free cash flow, it does not benefit us, the common day-to-day person, if that money is being used on stock buybacks. And I've seen this in my own life. Had a very brief stint at Bed Bath & Beyond, and they have these things called revolver loans that are injected into companies that are struggling, and then they're basically using that to do these share buybacks to essentially just prop up the stock, and just prolong the inevitable. And that company is definitely soon will be folding completely, I'm certain. But so that whole narrative of tax cuts doesn't help us in any way. And so that is just really a way to, again, prop up the stock market. And then another thing that you'll hear talked about is, so the tax cut should be given to us. If the tax cut is given to individuals, then that means that every month our paycheck, the amount of taxes that's withheld would go down. And so the amount for taxes withheld would go down, and then we would have more free cash flow, and then that would put more money in people's hands, and then presumably allow them to pay off their house or their car or spend it on whatever and all that. So it would have a direct, immediate impact on the economy. But like I said, these tax cuts are just a way to um, give corporations, more and more free cash flow to buy back their stock and prop up the stock market, because that's what this whole scheme is about. That is the last sort of thing that is the bright spot in our economy, is a inflated stock market. So that should be obvious to people, that a tax cut directly to corporations is not going to make its way into our pocket. But then the second thing is these tariffs. So all this is really just a talking point for companies to then say on their conference calls why they're not doing as well, and why their margins are suffering. Their top line, their revenue growth may not exist or be dropping, and then their margins might be eroding, which we've seen on mainstream news. And so it's basically just like chatter. It's like it's camouflage for what's really going on. Is just that the economy's slowing down, worldwide. That's just what it is. Like if you think of, the trucking movements and all the ships in the sea and all that, which, move goods from country to country and all that, it's just slowing down. That's just a fact. Like we're broke. The average American is absolutely broke. You can just go into any restaurant, see all the stores closing down, all that kind of stuff. Like I live in a high rise, and all the first floor is meant to be like retail or coffee shops and stuff, and they haven't had a store in there for a long time. And then so they finally decided to just convert 2 of them into a lounge for us, because like no one was opening up a business there. And this has been like this for years, and I'm in the heart of downtown Houston, so that's bad. And so this is just the economy. It's slowing down. So these tariffs, no one even knows if they're actually real or what the amount is or all that. Everybody's still, he might think of doing it, he might not, and this and that. It's just all words injected into the mainstream news to give people talking points or an excuse for really what's actually happening. Just the economy is slowing down. An economy like this, with money being held in different pockets. Like if you can imagine these entities like schools, universities, they have these endowments or money that they've earned or made, and corporations and the very, very wealthy, the more and more that they have bigger and bigger salaries. I was looking at Schlumberger's CEO is making $20 million a year, and the company is the stock is absolutely tanking. And so the money is getting held in fewer and fewer pockets, but a bigger and bigger amount of money. That just naturally slows down money velocity. This is just a simple concept. If money is held in fewer number of people's pockets, and their pockets are bigger and bigger, that just means that there's less and less money in circulation. So the only way to keep some amount in circulation is by injecting more into it. But every time they inject, a large percentage of that is going into the people who are already wealthy. So this whole scheme has to stop eventually, and we can see that it's slowing down now because the money is not reaching our pockets. That's just the reality of it. None of these initiatives are actually ensuring that money makes it to us, the average American person. And so that's really what's going on. So the tariffs are just like a talking point for companies on conference calls to explain, why their top line might be going down or their margins are shrinking. And but even though it's just strictly there's the economy slowing down, and these tax cuts are strictly to put more cash in corporations' pockets so they can buy back more of their stock, and again to prop up the stock market. So this is where we're at. The only positive thing is a stock market that is high, but it's been flat for a while. I think the peak was at 26,000, around 27,000, and that might have been the top. It's like unless they inject more money into the system through central banks, that probably is the peak. And then that's all we have to say is positive. It's like people, if you haven't benefited from that rise already, you're kind of screwed, because the market's been flat and dropping a little bit lately. So, those who've won already, and those people who are smart, who have all that, they're not going to keep their money in a market that has been flatlining and slightly going down, for the last year or so. That's a stupid, they're not stupid, those people. So they're going to put their money into something else that's rising. And I have a feeling it might be cryptos, but definitely gold and silver, because once you inject this much cash into the world, the currency divided by the amount of gold, if gold is fixed roughly and the currency has been increasing, that ratio is what it is, and eventually people will, purchase things that are tangible, physical, they can hold. Even if you debate that gold is, worth it or whatever, it's been known to be something of value. It's definitely more like $1 worth of gold is worth more than $1 worth of digital currency, because there's more money being printed every day than gold is being discovered. That's just a fact. And so no one could keep up with the amount of money that's being printed. So eventually things will, go to, this money will seek things that are actually have worth. And the inflation will be seen once the market crashes. So once the market goes down, even if it goes down 10% more or 20% more, all that money, which is a huge amount of money, let's say all the stock markets are drop in coordination around the world. Let's say 20% of the total money supply in the world is now released, because that money just goes somewhere. It's like conservation of energy. It's the same conservation of money. Money doesn't get destroyed or lost. It just gets reallocated. So all that quote unquote money, which is just credit, the expanse of the credit supply, that money, that will go somewhere. And so it will be injected into different markets, other markets in the stock market. So people will sell, so it'll be sitting as cash. People will then do something with that cash. They might, buy gold. They might buy cryptos. They might buy more real estate. So we'll see that once that money is actually released and people are forced to spend it on something else besides the stock market, certain assets, certain things are going to get really expensive. And so that's when you have hyperinflation, is that you just have way too much money in circulation for the number of assets that circulating entity has. And so we're not far away from that. Again, there's no reason to predict, because obviously this thing can go on in whatever mechanism for as long as central banks want. But slowly, I think you'll see that people around you will start, not have a job or have trouble finding another job, or you'll see more and more layoffs. And then, in my opinion, you'll start to see more and more people getting desperate, and naturally the suicide rate will increase as people run out of resources. And then the quote unquote, eventually it's just starts out like this, and then eventually the people that have enough resources to survive shrinks, and that's just the way it is. So anyway, I just wanted to talk about those few terms, and that's my view on why there's all this chatter in financial commentary. Hope everyone's doing well.